As you can see right here, if you are bearish, you want to be looking for upper close candles. Every time we find price trading into an up close candle when it's bearish, you're likely to get some sensitivity there and a displacement lower. This is the displacement lower right here. Instead of displacement on a 1 minute chart, there's a loss of opportunity for trades. So you can go in there and practice for your demo account or paper trade from them, or just backtest the idea. And you see here, I have the equity afternoon trend. The afternoon trend identification is the trend for equities and futures typically operates between 1 p.m. and 4 p.m. As you can see right here, this is the one. I am the charge of the UTC7, which is 10 a.m. and the 1 p.m. Under, Understand this time window is crucial for finding intraday opportunities. This is the up close candles, as you can see here. Now look at the charts right here, as I remarked out all the important information for you right here. So you see right here, we have a bearish market right here, up close, into the equities afternoon trend. Price, you see the price right here. If you look at the open, high, low, and the close candle here. So at this candle right here has an open of 23,973.25. This is the up close candle before we enter the equity afternoon trend. You see this? So now look at this right here. So you see the candle right here? Alright, let's take a look at this one first. This candle right here has a high of 23,973.25. This is not a coincidence. It's a market position. Right here, open candle 973.25. It's right here into the equities afternoon trend. We have the candle high of 23,973.25. See this? How do we know the market will move downwards from here? So from right here, if you remember ICT concepts, we have a order block right here, a low probability bearish movement. For those of you who don't know what an order block for a low probability is, I have a note for you right here. The order block sits in the space between the low and the open of small bullish candle. You see here? The candle shows, these candles show a bearish market, and we have a small bullish candle here. So price will often retrace to this order block before resuming the movement downwards. So we have an open for this candle at 23,986 and a low of 23,983.75. So if you look at the candle over here, this candle here, this candle right here is a confirmation for the market will continue its bearish movement. So this candle, if you look up here, I already marked out the price here for you too. So we have the height of 23,983.75. You see this? This is not a coincidence. This is a market structure. We have the time and price. They are matching right here. So we confirm the market will likely moving downwards here. So how do we, this is also a low, let me extend this a little bit for you guys can see this. Low probability bearish OP. So as you can see here, the market moves down this way, further away from this light right here. And you also see here, this is also a low probability bearish OP. It's an order block right here. The open candle and the low for the small bullish candle right here. You see this? The open at the price right here, the open is at 23,949.50 and the low is 23,946.25. You see this? And here over here, this is confirmation. You look at this candle right here. This candle here, if you get the high of here, at this candle here has a high of 23,946.25. You see this? It's perfect. So this is a second confirmation of a bearish market. So how do we know when we're going to enter the trade? So we're going to be using the Fibonacci retracement. Look at this right here. I have the swing high right here, which is from this candle, to a swing low right here with this candle right here. Alright. Alright. I'm going to be using the ICT Fibonacci retracement. Okay, as you can see right here, we have the OTE right here. For those of you who don't know, the OTE is the optimal trade entry. This is retracement right here. The retracement get down right here. You see this? It's perfect. Retracement right here. It's perfect 0.79 from the ICT concept. I'm going to enter the trade right here. Put the risk over the other block right here, and I will reward up here. So I'm going to show you right here. If we put our entry at this level right here with the price right here, and this is our stop loss right here, and this is our first target. The risk reward ratio is 3.81. See this? Alright, we have a second target which is right here. You see at the level right here, the price react to this level. That's why we have a candle push all the way up, and then the market continued to bearish downward here. This is the ICT retracement Fibonacci. However, if we're using the default ICT retracement, the FIB retracement, we're gonna get a better reward for this one. Let me show you for this one. Alright, if you look at this is the equity afternoon trend. Alright, let's take a look at the Fibonacci retracement for this one here. So this is the swing low and this is the swing high right here. 23,973.25. I'm gonna be using the default template. Okay. Alright, now you see this. Let me zoom it out a little bit. All right, what do you see right here? Let me write this. All right, you see right here, we enter the trade right here. Our first target, which is right here. Then we have a second target from the Fibonacci retracement with a second target right here. I'll mark that for you right here. All right. Then we have third, a third target right here. See this? The price moved down to this one. Take the profit here. We can take the profit right here as well. Our next profit would be this one right here. All right, take the profit right here. Price reacts right here and continues its downtrend. Take the profit right here. You see this? The price reacts at this level right here. And our last target, which is this one right here. See, the price get all of this. Let me show it again. This is the afternoon, the equity afternoon trend. We entry at the point right here. We put our stop loss up here. First target right here. This is our second target. This is the third target. The next target right here. And the last target right here. We still in the equity afternoon trend from here to here. We hit our target before the equity afternoon trend here. So after the price hits our target, you see right what happened after this? We have a strong bullish candle. You see how strong this is. From here, a 208 points. See this? So this is how you apply the ICT concept. This is the institution price action. And this is the micro market structure, time, and price concept. Okay. All right. So this is. Let me know what you guys think in the comment below. And if you would like to see more of this video, click the like button below. And I'll see you guys next time. Make a correction for this one. Okay, I'm gonna be using the Fibonacci retracement here with a default setting. Apply default right here. All right, so we have a swing low, which is right here. And then we have our swing high, which is at the point right here. Okay, so Fibonacci retracement. To those of you who are familiar with the Fibonacci retracement, we have the optimal entry point, which is right here. Okay, so retracement right here. We have the retracement after the market swing high and swing low right here. The market retracement back into this level right here. So we're going to entry at this point right here, put our stop loss up here on the swing high. Our first target would be right here. Second target right here. Okay. Our third target would be this right here. Okay. See, you can hit right here. The price reacts to this level right here and then moving upward a little bit. And then it continue its bearish movement. Let's go down to this point right here. Okay, you can see. And then our last target. This is you can assess all of your put right here, but if you want to do a field run, this is our last target right here, the Fibonacci retracement. As you can see, the market continue its trend, bearish trend from here. This is the entry point, and you can see when the price hits this level right here. You see the wick here, the market reversal. See this is go all the way up here. So if we put our risk reward for here for a short trade position, entry point right here, stop loss would be above or right at the swing high here, and our target all the way up here. As you can see here, we have a risk reward ratio of 16.28. This is too good to be true. However, if you follow this trend right here, the equity afternoon trend inside of the 1 p.m. to the 4 p.m. as Eastern time, entry here, put our stop loss up here, our first target right here, you can exit right here, then partial exit over here, and then partial exit right here, and let the free run to all the way up here. You see this? The price reacts at this level right here and reverse all the way up here. This is just perfect. All right, that's it for today. Hope you guys enjoyed this, and take care.